Let's turn to the autos. US car makers slumping in pre-market trading as they prepare for the impact of Trump's tariffs on Canada, Mexico and China. James Picariello of BNP Paribas writing, we can be looking at a total tariff cost of about $46 billion. And we get to an average price increase of $2,900 per vehicle. James joins us now for more. James, it's good to see you. Thanks for dropping by.
Thanks for having me in.
Let's go with that 2,900 number, OK? How much of that is going to be passed on to the end consumer? Just assuming for this conversation, for the purpose of this chat, that these tariffs will hold, they will stick.
Yeah, so 40% of that 2,900 will be supplier costs, so supply chain costs. And the few suppliers that have reported their earnings already have discussed the tariff topics, the topic of tariffs, and have said they need to pass that on to their customer, the automaker. And so, of course, the automaker's left with this decision of, I mean, they're going to have to try to pass on whatever costs they incur. Now, the interesting thing is, I mean, a $2,900 price increase, you add on the 10% tariff levied against China, auto parts, that's another $100 per vehicle, so you get to this clean $3,000. The only reason why the industry grew their U.S. sales in 2024 was because OEMs started to discount their pricing through incentive spending. And, you know, to think that now for 2025, we're conceiving price increases. I mean, there's almost no way that the industry would be able to sustain growth.
General Motors has been hit hardest. It's already down 7% so far this year. It's now down about 6% in pre-market trading, actually now almost a bit. I'm curious going forward about what they could do to potentially offset this tariff risk at a time when Mary Barra said that she does have a game plan, but hasn't outlined it.
Yeah. Yeah, it's really, the linchpin there is going to be excess U.S. capacity, right? The average capacity utilization for a U.S. automotive plant is 65%, 63% to be exact. So there is a lot of excess capacity at existing plants. And I think the negotiating lever will have to be OEMs committing a portion of their Canada and or Mexico production, bringing it back to the U.S. I think that's the only negotiation chip that the automakers have, because a 25% tariff truly, you know, it brings into the question, you know, an existential threat.
How much is that going to cost, though? Because the reason why they build these cars in Mexico is because the labor is so much cheaper. Yeah, so it's a great question. So if we go through the 25% tariff rate, with the OEMs not doing anything, with GM, let's focus on GM not doing a single thing, that's at least, in my calculation, $7 billion in tariff costs if they don't do anything. And then you add on maybe $4 or $5 billion of supply chain costs, right? So we're almost wiping out their entire EBIT under a 25% tariff rate. If they move, let's say, 300,000 vehicles from Mexico into the US, which would be about half of their total imports from Mexico and Canada, that would be the major cost differential would be labor, and that's only $1 billion. We say only $1 billion because we just walked through wiping out almost their entire EBIT.